Joining me to talk about the Wall Street at large and what's happening when it comes to this particular asset class is Peter Cardillo. Hi, Peter. Good evening. Thank you so much for joining us here on ET Now. So, our managing editor was just saying that maybe it's not the V-shaped rally everyone was making out to be. About 10 days ago, it looked like even if it was a bad stock, a garbage stock, it was only going to head one way, which was up. All of that now unfolding. So are you not part of that camp about the W-shaped rally?
No, I think, to begin with, I think we're in a correction here. And I say that because this market has been betting on a quick economic recovery. And I think last Wednesday, the Fed basically dampened those hopes. And so now with the coronavirus spiking up in several states, that just adds on more fear, and that fear factor of the coronavirus continuing to impact the economy is causing investors to rethink. And like I said on my opening comment, is that we're probably in the midst of a correction. And when it's all said and done, we're probably looking at losses somewhere between 10 and 12%, which is actually, I think, healthy for this market because the market has been too complacent and it continued to go up, perhaps on false hopes. And, with the economy still not fully open, that just simply means that unemployment is going to remain high. And I think, the Fed was went out of its way to point that out in their Fed minutes and also during Powell's press conference last week. And so I think the market needs to correct, and it's in a correction right now.
Right. Peter, hi, good evening. This is Ruchi Bhatia. I remember speaking to you a couple of days ago where you said that the best thing to do right now would be to err on the side of caution. Having said that, do you believe that the market is going to touch the lows, the kind of lows that we saw in the month of March?
I don't think that's going to happen. I think worst case scenario, we can see the S&P get down to the low 29 area, maybe 28.50, but not much more than that. Remember that we lost almost 5% last week. So all we're doing is tacking on maybe another 3 to 4, possibly 5 or 6% on the downside. So I don't see us touching the lows back in March.
Peter, also, what do you make of the way things are headed for the oil markets? We're seeing oil taking a knock once again due to the second wave of coronavirus, the fears coming in on that front. But we did see last week the OPEC and OPEC Plus countries also coming together and once again going ahead with an extension of the production cuts. So in a situation like this, where do you see oil prices headed?
Continue to go down without some sort of a break and just a fast, quick downward trend, then probably we can work our way lower. But my guess is that we're going to hang around these levels and probably get back up to around 38.42. And the reason why I say that is because OPEC has extended for another month their historic cuts that they enacted a month and a half ago. And with the world economy beginning to open up, we should see the market begin to rebalance. Now, of course, if there should be a second wave of the coronavirus that could mean some countries going back down into lockdown, then obviously all bets would be off. But if we stay the way we are now, I think there should be enough of support around present levels. In fact, if you look what's happening with the market today, we're down, but we're not really collapsing in a sense that we're not down like 5 or 7%, which is a good sign. So I think we just hang around these levels.